Now for more on what we can expect to come out of the ECB and Spain's upcoming bond auction, we're with ING's Investment Management's Head of Fixed Income and Economics, Valentijn van Nieuwenhuijzen. Valentijn, good morning. Thanks very much for joining us today.
Good morning.
Did Axel Weber, when he spoke to us a few weeks ago, did he break with protocol by pre-announcing measures or not?
Well, he did maybe to some extent, although I think we shouldn't exaggerate. Now with the succession of Trichet, there's a lot of focus on this issue. But to some extent, he did not really announce something new. The only thing which he did was sort of, cause to point to a certain date early next year. But there was already a very broad consensus that basically all liquidity measures would be maintained until the end of the year. And in that sense, I wouldn't say that for the market he really brought something new to the table.
But what about within the ECB itself? Does this cause some sort of rupture as we head towards an announcement of the next ECB president?
Yeah, well, I'm sure it does to some extent. This is a conservative institution. They never like to have any kind of rupture. And this was indeed a bit more open and a bit more pre-announcing than what they like it to be. On the other hand, you're always going to have these types of, maybe let's say, accidents in a period of succession and when there is so much focus on and people sort of struggle to hide their own ambitions.
So what's going to be announced, do you think? Basically, they're going to extend emergency lending measures through the end of this year. What do they do then thereafter?
Yeah, well, in that sense, I think it's going to be a relatively boring meeting with respect to policy announcements. They will reiterate that, it's state-dependent, that they're maintaining their current stance, maintaining their current measures, no rate hike in sight. And then they will refer to the fact that they've upgraded their growth outlook and that, on the back of that, their conviction that they're on the right path is probably relatively high. But certainly will not really pre-announce the next steps early next year as maybe Weber suggested.
Valentijn, as we know, yesterday stock markets rallied. German 10-year yields rose the most in 4 months, but they had a good August, as did the UK market and the US Treasury market. Does yesterday's move in the 10-year tell us that maybe the bond market's a little bit overstretched?
Well, there's a lot of debate about that, right? People talking about a bond bubble. We're certainly not one of them. We have to remember we had a massive August month for treasuries all across the globe. And that was very much driven by worries over a possible double dip in the US and by rising worries over disinflation, if not deflation, in the developed world. Yesterday, we had the ISM in the US. It was a huge surprise compared to expectations. So this is, sort of a bounce back from a very strong month. I do not think it's indicating that we're really in bubble territory. And actually, I think that, if you look at the fundamentals, bond markets will probably more trade sideways than really start to sell off from here onwards.
We had a successful Portuguese auction yesterday, six-month and one-year notes. Today we've got a Spanish 5-year auction. Anything to be worried about, Valentijn, or not?
Well, actually, I'm not too worried about it. If anything, I would say of peripheral European countries, Spain has been outperforming, both with respect to policy, with respect to reform, with respect to economic momentum, and also with respect to markets, if you see where, spreads are trading compared to other treasury markets. And you see that the liquidity in auctions, but also liquidity during, let's say, in the interbank market where Spanish treasuries are used as collateral, has increased. So in a very broad context, I'm quite comfortable about this auction.
Valentijn, thanks for joining us. Valentijn van Nieuwenhuijzen there from ING Investment Management.